Today's Friday, October 4th. Happy Friday. Wanted to give another quick real estate market update, just what's going on in Southern California. And I also wanted to touch base on this whole commission and NAR settlement situation that we're still kind of dealing with. Fortunately, it's been out of the news for several weeks, so it hasn't been on the mainstream media and all the headlines there. But I wanted to go through what I've been experiencing over the last really month that we've been going through this, and just some boots on the ground. Most importantly, interest rates. So interest rates they're very important, which is why I keep talking about them. Interest rates affect just about everybody, not just the consumer buying and selling, but homeowners, if they wanted to pull money out or take a line of credit against their home, businesses, it definitely affects businesses. So just about everybody is affected by interest rates in one way or another. So they are important, and they're very important in my industry, especially just the whole affordability concept there. And so with interest rates, so today, it's kind of interesting because the jobs reports also came out today, and the job reports did a little bit better. I think it was over 250,000 jobs were created in the last 30 days, or in the previous month in September. And so that's good news. However, I saw rates go up more than 0.25% today. And so we got down about 2 weeks ago below 6.1. So right around 6.1 or just below that for a couple days. And now yesterday we were at 6.25, and now we're at 6.53 for an average 30-year fixed loan. So rates went up just over 0.25% today when the feds released the jobs reports, which turned out to be a little bit better than what people were expecting. And so some people are speculating that rates have gone up because the economy isn't as bad as what potentially the feds were expecting it to be. So rates have gone up a little bit. 6.5 is still pretty low over the last 2.5 years. I know that's still really high if you look at it over the last 15 years, but the last 2.5 years to still be below 7% is good, but it's not the best. We obviously want it as low as possible. If we can get in the fours again, I think that would be super helpful. So that's interest rates. They're bouncing around. We've had several this whole week, I believe, has been a red day of rates going up every single day. It's mainly been a little bit, but today being almost 0.3% is pretty noticeable. So we'll see what happens there. Now, Orange County inventory. Inventory also is important. So interest rates and inventory. Inventory in Orange County today, residential properties in Orange County, we're at 3,674 homes on the market today. That's actively for sale. And again, we normally have 7,000. However, the last couple years, it's been below 3,000 homes on the market. So we are getting a little bit more inventory. I don't think it's necessarily anything to freak out about. It's nothing noticeable to make me think that potentially prices could come down. We are still seeing prices going up, even with rates still being pretty dang high. And my 2 cents is, my guess, my prediction is because our inventory is cut in half of what we should have. So inventory is still pretty low, and properties are still selling. The ones that are selling, within the first week are priced right at market value or maybe slightly below, and they show really, really well. So the seller either has done upgrades in the past, or in the recent past, and or just keeps it very, very tidy. So those homes are selling really quickly. We are seeing some homes that are, if they're priced a little bit above what the market is demanding, and if they don't show well, they're staying on the market for 30, 60 days in Orange County, which is still, that's not, anything crazy, but we're seeing a little bit of extreme. You're either selling in the first week, or it's going to be 45 to 60 days. It's kind of funny how that is. Now finishing up today about the realtor commission. So this is pretty dang new. It's almost like commercial real estate, to where when you submit an offer, you also include what commission you would like to have. See, in previous time, commission has always been disclosed up front of what the seller is paying, and then also the realtors were protected that it wasn't going to kind of jumble around throughout the transaction or after you show the property. We were protected before we showed a property. Every realtor knew what the commission that was offered was, and then you could, the buyer didn't have to worry about having an uncomfortable conversation about commission with their realtor on the buy side. And so it's been a little over a month, and things are going fairly okay. There, with multiple offers though, I have seen it being a little bit more challenging with hearing up front what the commission is going to be. How we're handling it is, let's say I'm representing a buyer, and so I have a property that I'm going to show my client. Normally, especially if it's a property that I think my client's going to like, I'm going to call the listing agent, ask if there's anything special about the property, is there anything surprising that's going to be on the seller disclosures, and now I ask about commission. Is the seller offering a commission? Have you guys already discussed what they would like to offer? And so we have that conversation, and then normally it's pretty easy. Then if they say it's 2% or 2.5% or whatever it is, as we write the offer, we can just put that in there. There's another form that we use to lock in the buyer side commission, so that the buyer also doesn't have to pay that a part of their closing cost. I know it's a little misleading. The sellers are still paying the buyer commission. It's just a little bit of a roundabout way. So it's just a little silly that all this has transpired when the same thing is happening in about 95% of the situations. Now, I think over time, as the market picks up, I think this is where it could be a little bit of a problem for realtors, because when you have 10 and 15 offers like we had in late of 2020 and into 2020 and throughout 2021, there's going to be some realtors that are going to, let's say the seller said that they would pay 2% commission. There's going to be some realtors that say, hey, I'll take 1% or 1.5%, so that their client's offer goes a little bit further. And so I think that I'm going to see that a little bit more, and it's going to be unfortunate when you're on the buyer side, because commissions are going to go down a little bit on the buyer side, and so that is going to be naturally challenging for realtors. And I also think that it can also be challenging for the buyers, because if we're not unfortunately going to be able to get paid from the seller, then I think some realtors might have an open conversation with their buyer to have them cover the remaining of those fees. So it's still a little early on to see what's going on, but I think that it's we're going to have to keep figuring out how the best way to handle this.